Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 16th of September 2016 and we're providing our views on the future direction of silver prices for the remainder of the year. We had planned to produce this as a single episode, however due to its length we have broken it down into two parts. Part 1 produced today and Part 2 on Sunday. Then next week we shall give our predictions for gold. How often have we been asked, at what level do you think silver will rise to in 2016? It is without doubt an interesting and fair question to ask a channel discussing precious metals. Of course, without a crystal ball that actually works, one can only provide an educated guess, hopefully supported by financial and political analysis. At the time of writing this report, silver stands at $19.03. Its 1-year high has been $20.87. Its 3-year high, $23. And its 5-year high, $41.23. And its all-time high, $49.45, or many rounded up to $50. This compares with a 5-year low of $13.58 and an all-time low of $1.27. So why are we mentioning these prices? Well, firstly, to put into perspective the parameters we're looking at. An all-time high of $50 was achieved on 2 occasions. Once under the Hunt Brothers manipulation 1980, and secondly under the extreme economic conditions witnessed in 2011 as a result of the 2008 economic crisis. Both occasions were an extremity, and despite this, $50 was silver's peak. Okay, we could allow for inflation, etc., etc., but these headline figures are important. Investment decisions are often based on psychology, as well as mathematics, trend analysis, and opportunity cost. With industry currently undergoing a recession, or at best very nominal growth, be under no illusion that the only parameter that can drive silver prices significantly higher in the short term, that is 1 to 2 years, is investment demand. Now, whether you are a chartist, fundamentalist, hedge fund, or outright gambler, psychology plays an important part in your price determination. We all know that mining companies in recent years have been able to reduce their all-in sustainable costs significantly, falling from as high as $30 an ounce to, in some cases, below $10, with the average resting somewhere between $12 to $16. So at the current $19, miners are making money, a lot more than they thought they would just 12 months ago, when silver was languishing between $13 and $14 per ounce. So what are we trying to say here? Well, in our view, even if there is an economic recovery, and many believe there will not be, then silver prices have a ceiling because allowing for a year of healthy prices, i.e. current levels or marginally above, supply can be improved sufficiently to meet industrial demand, thereby capping prices to little more, in our view, than $22 to $25, perhaps marginally beating its 5-year high. So let's look at what is likely to be the main industrial driver for silver this year. Well, undoubtedly many analysts have remarked upon silver's use in solar energy technology, as silver plays a key role in photovoltaic cells, PV cells. According to renewable energy research site Clean Technica, roughly 16 gigawatts worth of solar panels are expected to be installed by the end of 2016. That marks a significant increase of 119% compared with 2015 installations. The Silver Institute projects some 70 million ounces to be used for solar energy this year. In addition, a number of other industrial uses are cited, which include batteries, dentistry, glass coatings, LED chips, medicine, nuclear reactors, photography, semiconductors, touchscreens, water purification and wood preservatives. However, despite all of these, a 1, 2 or even 3% rise in global productivity will be insufficient to move prices significantly from current levels. So what can enable prices to exceed this level during the next couple of years? Well, undoubtedly, they are economic and psychological. And here are some of the influences. 1. Demand for silver bullion has skyrocketed in recent years, and that growth is expected to continue throughout 2016. Sales of the 1 ounce American silver eagle coin, for example, the official silver coin of the United States, have soared 370% since 2007. According to the US Mint, the government agency that controls coin circulation, silver eagle sales hit a record 47 million units in 2015. What's even more bullish for silver prices is bullion demand in 2016 and was already on track to outpace last year. As of May the 3rd, roughly 19.6 million silver eagle coins had been sold, and predictions of 60 million eagle sales were being touted for the year. However, in July, a representative of the Mint allegedly admitted that they were not going to produce more than 50 million ounces of silver eagles. In other words, restricting demand, thereby potentially uplifting their price in the secondary market. Consumer demand for coins isn't just growing in the United States. For example, Australian silver sales hit 4.29 million ounces in the first quarter of 2016. That marked a 165% increase from quarter 1 in 2015, according to Australia's Perth Mint. It also announced on the 20th of July that sales of the 2016 Australian kangaroo silver bullion coins hit the 10 million mark, doubling expectations. 2. The Federal Reserve's hesitancy to raise interest rates will provide another incentive for higher silver prices. Commodities that are priced in US dollars benefit from low interest rates. That's because higher rates boost the value of the dollar, making dollar-denominated metals like silver more expensive. This makes silver bullion less affordable to users of other currencies, which reduces demand and lowers silver prices. At the rate the Fed is moving, it looks like the price of silver can look forward to lower interest rates for some months to come. So far, Fed Chairwoman Janet Yellen left rates unchanged due to slowing economic growth. However, Fed hawks are now commenting upon a rate rise soon. Movement in the gold to silver ratio will keep attracting investors to the silver market this year. The gold to silver ratio has traditionally been one of the more important metrics used in the metals market. It's used to calculate the relative values of gold and silver to each other. To find the ratio, you divide the current gold price per ounce by the current silver price per ounce. The ratio hit record highs at a peak of 83 during the second week of March, meaning 83 ounces of silver was required to buy 1 ounce of gold. That extreme ratio, which has only been reached 3 other times since 1996, seemed to pull the silver price lower until a change of psychology or temperament kicked in, whereby it appeared that all major investors thought, hang on, this GSR is far too high, and was corrected very rapidly to current levels. Since then, the gold to silver ratio has plunged to its current 69 to 70 range, resulting in a 40% increase in silver prices for the year to date. Some investors and commentators believe that the ratio will fall further and closer to its more traditional level of 55 anytime soon. 4. Demand for physical silver will rise in 2016 thanks to its safe haven appeal. A safe haven investment is one whose value either increases or remains the same during periods of market volatility. Investors and traders keep safe havens in their portfolios as insurance against unforeseen drops in the Dow Jones Industrial Average or S&P 500. Low interest rates and declining stocks push silver prices higher due to the metal's appeal as a safe haven for your money. Metals like silver are considered safe havens because they're physical assets. Silver prices will either move sideways or increase when the stock market dramatically dips. And 5, silver jewellery sales are growing, and that's bullish news for silver prices. According to the Silver Institute, sales of silver jewellery in the US increased in 2015 for the 7th straight year. Roughly 60% of jewellery retailers saw an average 15% increase in sales. Not to mention nearly 50% of all US retailers said their silver-based items had the highest turnover rate in 2015. About 87% of US retailers were optimistic that strong silver jewellery sales would persist into 2016, and this appears to be the case. There are several factors that can drag silver prices lower, however. 2 of the biggest influences are interest rates and stock market performance. When interest rates rise, silver prices usually fall because high interest rates increase the value of the US dollar. A valuable dollar makes commodities like silver that are priced in dollars more expensive to anyone buying it with another currency. Similarly, a stock market rally usually pulls silver prices down because investors like to buy silver as a hedge against market volatility. When stocks rise, investors spend more money on these more liquid assets than silver. According to Money Morning global resource specialist Peter Krauth, silver prices are headed to $22 an ounce by the end of 2016. In part 2 of this video, we reveal our views on where we see the silver price towards the end of this year. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.